Good day, everyone, and welcome to our 45th episode of In Conversation with Convergence. My name is George Evans, and this is a monthly podcast where we feature our clients and some very special guests. We help you get to know the market leaders and some of the top issues facing the industry. I'm joined today by an old friend, Georges Archibald, who is the Chief Commercial Officer at Apex. George, as I would tell you, I think George is a recognized expert in the alternatives industry. So welcome, George. Thanks for joining me.
Great to be here, George. Always nice to see you.
Yes, great to see you. So, George, why don't we start with a little bit just about you? While I think you're known to many, I think there might be folks that maybe don't know you, and I'd love them to get a little bit about your pedigree and background first, just kind of what you've done so far in your illustrious career.
Yeah, so from a career perspective, I did start off in prime brokerage. So I did that for the better part of a decade with some large providers, and then moved over to the fund administration space, and have done that now for going on 15 years. So I have really worked across the alternative asset industry landscape for that period. Starting obviously in the hedge fund space, but then extending into private equity and everything along the way from UCITS funds through to 40 Act mutual funds. So I've really seen the evolution of the space. I've seen the growth, and from a market perspective, what's amazing to see is really the depth of investment product that's out there today. And what that really affords the market from a returns perspective. So access, diversification, innovation, all of these aspects of the market really taking form in this alternative investment wrapper. So very exciting for me to be in this position at the forefront of what I think is a fantastic industry.
Well, and we'll get into it a little bit, but it even gets more exciting with the whole democratization, right? As alternatives go retail, right? Creates a whole new set of opportunities and challenges. Let's talk about Apex. Today in the world, I think at last count, and it changes daily, there are about 660 fund administrators, and I think what has been fun to watch from my perspective, because like you, I've been in the industry for some time, and certainly around the fund admin business for an awfully long time. To watch kind of Apex, I think, grow the way it has and get to kind of a dominating market share so quickly has been pretty impressive to watch. So I'd like just kind of you to give our listeners a little overview. I know it's a big organization with lots of parts, but if you can give us that Cliff Note version on overview of Apex, that'd be terrific.
Yeah. So, I mean, for those of you who are not familiar, we've been in business now 21 years, and we've really grown the firm to what it is today, which is going on 3.4 trillion in assets under administration. So it's really grown significantly. We do provide services that are beyond what you would think of as a traditional fund administrator, and we really service assets across the landscape globally, and then from a depth of product perspective, really providing services that are not the audit piece and not the legal piece, but other than that really are the servicing piece for an asset or a fund, and that's really everything from middle office all the way to back office, but then importantly, services like Manco and others that really deliver for the front office. So we think of really the investment life cycle. We think of it from everything from discovery through investment all the way through to investor reporting and everything in between. So that's the value chain for us. And we've built really a product roadmap that allows a manager to utilize our services really through that value chain. And now what we've actually seen is, you mentioned an important piece, democratization. We've seen structures out there that allow access to a broader set of constituents, number one. And then number two, clearly as asset owners are looking at delivering for their ultimate constituents, there are a lot of tools that we can help deliver for them that, from a data perspective, allow them to better balance a portfolio view as to where their exposures are, but then importantly also manage to their constituencies in a more real-time fashion. So we have seen a lot of those dynamics at play in the marketplace, and we're very excited to be at the forefront of the industry in terms of delivering some of those solutions. So an exciting place for us to be. We are global, so one of the things we do provide is really the ability to access global markets in a particular format. So it could be a licensed format depending on that jurisdiction. We're in over 50 countries, actually 53 countries today, with over 100 locations. So that really does allow us the ability to service clients across really money center jurisdictions, but then also opportunistically across regions they may be interested in. So we are in a lot of key growth regions, including the Middle East, including South America, including strategic locations in Africa and Asia. So we are very much at the forefront in terms of making sure that we have the most robust offering, and importantly, the best types of tools into that offering in the marketplace.
Yeah, and George, you guys have, I think, led the way in terms of a very robust kind of acquisition strategy, right? And can you just talk a little bit about not the next acquisition, but a little bit about just the fundamentals and some of the thinking that goes into that, around whether it's product or whether it's region. Just how do you guys think as a firm about the next and the right acquisitions?
So importantly, the founder, Peter Hughes, has been really the linchpin to this strategy and the architect. What we wanted to do is be in a position to really partner with clients that are growth clients, but importantly, that want to include us as part of their partnership strategy in terms of delivering for the firm, delivering for their ultimate stakeholders. And in order to do that, we needed to be in a position whereby we could service them globally and then also across their product requirements. So, for instance, if you look at private credit today, we were very big investors into private credit in terms of delivery of infrastructure to the market. And if you look at many of the large asset managers, and you look at some of the market opportunities, those market opportunities around private credit are significant, and we're now in a position to be able to partner with clients on private credit. So there is a product view to not only growing inorganically, but then also to growing our tool set organically to provide a best-in-class service to the market. So it could be a product lens that we look at because the market actually is expressing opportunities across a
Yeah.
particular asset class. And then it could also be a geography. So, for instance, our latest acquisition in Chile was a small acquisition. And that acquisition really allowed us to service larger asset managers who are in Chile, but wanted to remove some of the vendor risk from their particular engagements. And then importantly, really get scaling ability with a vendor like Apex that can actually provide a broad set of solutions to the market. So we've really kind of played both the product and the geographic angles so that we're really in a position to provide strategically in partnership with very large clients. And that's really the name of the game, is being able to be on the front foot. And we've done again a lot organically as well. So it's not only the inorganic component, but it's the organic component of how you bring the pieces together to have a differentiated product.
Yeah, well, you made a couple points, right? One a little earlier about supporting global asset flows, right? And when you think about it, right, there's really only a handful of top tier fund admins that can do that well. And I think you mentioned, um, uh, you know, quite a number of locations, right? And then I think the other point you make, which is very interesting, is how the market has really moved on the PE front from, kind of uh, while traditional LBO is still very strong, the private credit market is clearly where we're seeing, all the growth, right? And at the moment, right? And for the longest time now, I think we've seen just in terms of um, capital flows, just kind of I'd say closed end in general, right, has been just a dominant kind of asset type, right? Big part of your strategy, right?
Yeah, exactly. And again, right, from a secular market perspective, obviously, you have banks that lend across a portion of the capital structure, and they're very happy there. But there's a portion of the capital structure that is not lent against, or is less efficient, and that's where private credit comes in. And we don't see any of that abating. So we only see institutions looking to further deploy capital into private credit, and our offering not only looks at the infrastructure, but it also looks at the positioning. So we're doing some interesting things around that to better help support managers as they're really differentiating themselves in that market. So
Can you
super
can you
exciting for us.
elaborate on that, George, a little bit? Like you talk about focusing on private market infrastructure and maybe standards, right?
Yeah.
Could you do a little deeper dive on that if you don't mind?
Well, I think there's a lot around data today. So you can think of benchmarking as is one way of looking at it, and how do you allow a manager to benchmark themselves and create value to their ultimate stakeholders. So we have some tools inside of our business that allows for that. We also have some tools around um, really events and what that infrastructure looks like, and depending on jurisdiction, support services accordingly in terms of capital ecosystem. So we have an events business that you're familiar with. You've been front and center as a sponsor, so we thank you for that. But we do see the opportunity not only on the technical side, but also on the human capital side in terms of making impactful connections through our events business. So
Yeah.
um,
So look, I was going to ask you
interesting
about that, and I'm going to come
interesting
back to
stuff.
a couple of things, but obviously it's called Apex Invest, and I've been very impressed with quickly the global nature of it, right? And maybe you could tell folks a little bit about kind of your calendar this year, which I think is pretty impressive, but really the what you're doing for GPs and LPs at these events.
Well, I think what we think of this slightly differently. So we're not a conference business. We put together curated events. Typically, the coverage ratio is very different than a regular type of conference, because the profit is not in making a profitable conference business. The profit is in really developing or helping firms develop relationships through making really an environment that allows for connections to happen in an organic way. And from a conference perspective, a lot of those conferences that we see out there in the market have multiple different participants in those conferences, and we
Yeah.
want to keep it to basically a much more curated type of event where you have more investors targeting fewer managers, and from a due diligence perspective, basically allowing them the ability to form relationships where they see fit, and then really follow through with relationships where they have interest as they see fit, and let them run their respective processes the way they run their processes versus putting them into a preconceived format that doesn't necessarily fit their particular objectives. So we're very much focused on allowing organic relationships to take root, but allowing them to mature in a format that is specific to the particular call it investor need and demand. So,
Yeah, yeah,
and we've had some success there.
I know you did it last year in places like Vegas and uh, the, I think the Bahamas. Where are your locations in 2025, George?
So we see a lot of growth in the Middle East. So we had one in Saudi. We'll have one in Abu Dhabi. We'll have one in the Cayman Islands. I think that one is in April. We'll have Switzerland. We do have a lot of the growth areas and locations that are lining up. And importantly, what we want to do is make sure that from an assets represented perspective, we have the right types of assets in the room, and ultimately those assets can then really have the right level of curated discussions. But importantly, if you were just in one location, you wouldn't necessarily get the geographic nuance
Right.
and coverage you want. So that's why we have really a global reach when we think of these types of events.
Yeah, I mean, I listen. I'll tell you what. I think it's brilliant because I think the branding that you get out of that is immeasurable. I really do. Let me switch gears.
So let me actually just give you an idea, right, of quantum or size, right? I'm a numbers guy, so 4 point I think 3 trillion was in the room in Abu Dhabi. We had 4.3 trillion represented. So that's a
Wow,
real number.
that's a big number.
Um,
Yeah,
and if you're a manager, where else are you going to get access to 4.3 trillion inside of a couple of days, right? Nowhere
right. Yeah,
really that I nowhere
yeah,
really that I know about. So if I flip the switch and say, all right, if I were a manager, where would I want to spend time? That's where I want to. That's
yep,
where I would want to spend time.
yep,
So I always think to myself is, um, what would a manager want in this scenario? What would an investor want in this scenario? So I always try to flip it so we can actually deliver really what the market would want versus, you know, based on a preconceived notion of what the economic model should be.
yeah, yeah.
And that's really, I think, what's led to the, I mean, leapfrog success of those events. Um, you know, I don't want to be immodest, but that business has just exploded from a size perspective and an impact perspective. So super exciting.
Yeah, no, I think it's terrific. I want to switch gears a little bit. I want to talk about your thoughts around digital assets, Bitcoin. I know that's important to the firm.
I
You know,
wish I had bought it. I wish I had bought it a decade ago.
yeah. The so your thoughts just on kind of the trajectory, maybe the monetary policy and how that can create some opportunity. I want to get your thoughts on DA and Bitcoin.
Yeah, look, our thoughts are really along the lines of digital asset framework. So if you have a digital asset framework, then it becomes actually much easier to not only um, monetize that framework, but it also becomes easier to manage business. So if we think of ourselves as an asset servicer, we want to create the infrastructure that allows managers to transact more efficiently and better. But then we also want to create obviously value for our clients in terms of potential market impact as well. So I think our role in the market is those two key pieces. And if we can help deliver those two key pieces, I think we're in good shape. So from an infrastructure perspective, we are helping funds tokenize, and they could be tokenizing assets. They could also be tokenizing interests as well, so LP interests. So, for instance, you saw the announcement out there in the press, where together with Signum Bank, we did a DLT Hamilton Lane fund, and that was interesting. So everyone can look at that. It's part of the public record.
Yeah,
And what it allowed was really inside the Sygnum Bank infrastructure for there to be smaller denomination purchases inside of that infrastructure, which then basically allowed more access into this feeder vehicle. So what's interesting is that you can actually use part of this infrastructure to further make a platform more efficient and ultimately democratize access in a way that hadn't previously been done at the right cost point or cost structure. So basically, what you're doing is you're lowering the cost, you're increasing the efficiency, and ultimately allowing value to be unlocked where value was definitely harder to come by
Yeah.
because of the cost and other variables that made it impracticable for smaller investors to come inside of obviously a compliant framework. So
Yeah.
not really changing the compliance framework. What you're changing is the friction and the cost of doing business.
Yeah.
So that's kind of one bit. The other bit I think that we haven't really seen come through is basically really the market aspect of it. So I think under a new administration in the U.S., I think you're going to see that evolve in terms of market framework and infrastructure for digital assets, and that will allow further fractionalization because the technology is already there. So you can already
Yeah.
put an asset on blockchain. You can actually put a capital stack on blockchain. Trade different pieces of the capital stack based on blockchain. It's immutable, et cetera. So you actually have a massive amount of benefit and efficiency in the infrastructure. So we want to be part of that, and that's where we're spending a lot of our time in terms of use cases. So I think it's still early days. I don't think obviously Bitcoin ETFs and things like that are early days at this point. Those are now into the market. You also have fractionalized or um, other types of platforms out there that allow for access. But I think where you're going to see the next value being created is across basically tokenized assets, and then being able to actually leverage and trade those assets in a much more fluid way, which
Yeah.
is good,
Well,
right?
certainly, the new administration has made it abundantly clear in the last 30, 60 days, right? Their bullish views on you know DA and crypto and the like. In fact, I was just looking while you were talking that I was wondering what the market would be doing today after yesterday, and
Yeah.
it's up about 400, 500 points right
I've
now.
I've been following it, and I think our next session should be session number 47, where we talk about digital assets, and I think that would actually line up better than being session number 45.
45. So
So
you want to be back in 2 months, is what you're telling me.
I already have the content. I'm ready. So
The,
so you
um,
let me know. We're deep in the market, and we're deep into investing into the space. So very exciting for us to be in this position.
yeah. All right. So listen, as we wrap up, George, if you had to give me kind of the elevator on Apex, like how would you say you guys are, you know, I'm an asset manager. I'm global. I got lots of choices. Lots of administrators have clients that look like me. How would you differentiate yourself if you had to give them, two, three, four reasons why pick Apex?
I'll give you one reason. Partner, right? We're your partner. We're an extension of your team, and we basically invest and reinvest into tech. So our view is that when we partner, we're not only going to be an extension of your team from a people perspective. We're not only going to give you jurisdictional access. We're not only going to give you jurisdictional expertise. We're not only going to give you data, but we're going to give you actually investment into tech, which then inures to your benefit from a scaling perspective and a go-to-market perspective. So it could be, our GPLP portal in terms of apexinvest.io, where LPs are using that portal to do GP discovery off the back of events. But then it's also our digital onboarding tool, where basically now investors digitally onboard versus actually going the old way. So it's
Yeah.
basically everything from LP discovery to LP onboarding to the latest in digital tools for managing the investor. And then obviously, investing into the infrastructure that just makes your business more efficient. So we just rolled out, for instance, a communication and workflow tool called Tempo. And that basically is what I like to refer to as a digital hallway between basically the client and us, which basically makes one ecosystem where we can communicate, where we can understand workflows together, and that ultimately allows a manager to be in a much better position when they're either launching a fund, launching a new product, getting into a new geography. They now have that workflow at their fingertips and then can actually manage their stakeholders in a much more efficient manner.
Yeah.
So, we're in a position where this is all we do, this is all we breathe, this is all we think about. When I go to sleep, I think about this. When I wake up, I think about this. And if you ask my family, unfortunately, on the weekend, I also think about this.
Yeah.
So it's all consuming, but it's a passion. It's not really a job for us in that way. And although it sounds cliche, it's true. It's kind of thinking with an engineer's brain. How do we make this work better? How do we make it work in a way that if we reimagine it could be much better than the way it used to be done.
Yeah.
And we find a lot of times in our industry, you ask someone a question, well, why do we do it this way? I ask my teams all the time, why are we doing it this way? And they say, because it's always been done this way. I said, well, let's wipe that from our memory banks. How would you do it if you were to design it? And that's a lot of the things we're doing. It's how would you do it if you were to design it de novo? Because a lot of the stuff was designed with, antiquated systems, et
That's
cetera.
right.
And we no longer need to do it that way. So that's what we're doing is we're reinvesting into actually thinking differently and executing against that vision.
Well, listen, it's been very apparent because I get this great view, right, of many of your competitors, right, and it's been impressive to see what you guys have done in such a short period of time. I want to tell you, you've been a great partner to us, a great client with us. You are on the leading edge of a lot of the products we sell, right, and I think that's part of your culture, right, inside and out. And so I just want to thank you. It's been a really good experience with you and your team from my perspective. So,
Great to many more years ahead doing this together, George. We appreciate your partnership.